Happy Friday. It's your Treadmill Tax guys back at it again. New topics coming in. I'm going to do a nice few series of videos and going to be releasing them over the next few weeks. But one of the topics that comes in today, and I see it often when I'm doing tax work, is with regards to businesses. We've got small businesses that come in, from people that are, obviously realtors, to people selling things on eBay, to network marketing businesses, Mary Kay, Shackley, Amway, right? Any of those types of things, Cutco, whatever those types of things are. And the question I get is in regards to how does it work, from tax purposes? Well, first and foremost, as long as it's not an entity, incorporated, a partnership, if this is you working by yourself, we're going to file what's called a Schedule C. It's a small business form. Typical cost of a Schedule C, if you saw a professional, maybe $100, $200, something like that for that particular form with all the subschedules. But one of the things that comes out is that the Schedule C is designed for a trade or business. And when we use the term trade or business, we're thinking about something that we're in it to really make money. And a lot of us tax guys, we use this term profit motive because that's kind of what we're trained on, from the regards to the IRS and audits and things like that. But there's a whole nother subset of rules related to hobbies. And one of the differentiating things is trying to figure out, well, what's the difference? What's it mean? If I'm a hobby, if I'm a business, what is it? Well, it's very subjective. So it's not black or white. Someone can't walk in the door and I can't go, bang, that's a hobby, bang, that's a business. It's subjective testing. So let's talk first and foremost about why we may want to be a business versus a hobby and how it works from a tax perspective. Well, the biggest thing from a business standpoint is a lot of times businesses, when they start, they don't make any money, right? Year one, year two, year three, they tend to lose money. It is very, very normal for startup businesses to lose money. Well, if something is considered a hobby, we actually aren't allowed to deduct what our losses would be and help offset potentially other types of income, W-2s, whatever else might be there. But if it's an active trade or business with a profit motive and I generate losses and I'm actually participating in this business materially, well, if I have losses and maybe I have a day job that's getting a W-2, those losses can actually offset the W-2, bring it down, and I might increase my refund or reduce what I might owe at the end of the year. So it's kind of a big deal. We definitely want things to be trade or businesses. So how do we get there? How do we do it? What do we got to do? Well, I mentioned earlier that it's subjective. And the subjectivity comes in from the standpoint of kind of opinion, right? Like I kind of know, let's talk about kind of a checklist. Well, if the IRS says I have to have a profit motive to be considered a business, well, that's logical, right? I mean, we're in it to make money. How do we prove that, right? If we got audited, if I had a loss, how do I not be a hobby? Because hobbies don't get those losses. Well, subjectively, let's say you've got accounting software, right? One of my earlier videos I talk about QuickBooks. Well, maybe we've got an accounting package that we're dealing with to keep track of those things. Well, maybe we've got a budget set up. How about a website? How about business cards? How about an office? How about a business plan? SBA loans, right? Things that people would do in regards to being a business that they're not going to do during a hobby. So let's talk about big businesses that are they're kind of hobbies, folks. I hate to say it, but if you're selling Melaleuca, you're selling Tupperware, you're selling any skin stuff, Mary Kay, all of the network marketing things that are out there, you've got to be very careful. Are some people in network marketing a trade or a business? Absolutely. This is not blanketed. However, if I'm inviting a bunch of people over to my house, I'm buying a bunch of wine, cheese, hors d'oeuvres, we're having a good old time, and they have the ability to buy something, right, from a direct sales perspective, and they talk about the tax savings for being in the industry, well, that's kind of a red flag, from regards to being a business. Now, it doesn't mean it's not. Again, this is not a blanketed statement, but it's a smell test. If you're having a lot of fun, if you're trying to write off all your personal stuff, and you got other people telling you can write off all your personal purchases from the company that you're trying to sign up more reps for, you're going to run into some problems there. And those tend to be hobbies. Let's talk about the non-network marketing businesses, the ones I see all the time. I love to fish. I want to be a fishing guide on Lake Mille Lacs here, nice lake in Minnesota. And I want to bring people out there, and I'll charge a little bit to bring people out, but I want to write off my boat. I want to write off the gas, the maintenance on my boat. I want to buy a trailer, right? And so in their mind, this isn't really a business. This is their way to try to get tax write-offs. That, folks, is a hobby. That is not necessarily going to be a business. So be very, very careful when you start to try to go down that rabbit hole for that, right? A business, profit motive, provable profit motive, business plans, accounting, maybe you have a tax accountant, all of these things. Then, if you do generate a loss, congratulations, right? We're not looking to make losses, of course, but those losses could offset your W-2 wages, could increase your refund or reduce what you might owe at the end of the year, and that's exactly what you want to do. So make sure it's a business and not a hobby. Have a great day.